Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me to this morning's webinar. The broad-based weakness across the US dollar fueled the overnight markets, and with the advance of the Australian dollar to a 7-week high in a row, clips a high of 80.82. Now that was the resistance of 80 and has been respected as it pulls back slightly this morning. What fueled the move was that US Treasury Secretary Stephen Mnuchin favoured a softer US dollar in his comments this morning from the WEF in Davos, and said that he feels that the market is open for business, and the fact that a weaker US dollar is good for us and it relates to trade and opportunities. It's interesting to see, though, that he's come out and said this when the US dollar has been on a 12-month decline and now on a 4-year low. It's quite surprising that we've got to an 88.93, and purely on the fact that you would want to make a comment by saying that they are not concerned. It's not concern of ours at all that the US dollar is weaker. So I'm not a bit sort of puzzled on that move, but nevertheless, we are pulling back and therefore looks towards a support of 80.25. There is some bearish divergence on this indicator, so we could see that level come under pressure. Now, that being said, though, if we do get a break above 80.80, this would give further scope to the upside and bring in a target of potentially to 81.55. So, as I mentioned, with the US dollar posting 4-year lows, the euro has got to highs around December 2014. Now, tonight is the main event, which was when ECB talks about their rate decision and also release. If they hold rates, then of course Mario Draghi will be pressured into questions about the next move. And no doubt, like most central bankers, will be pushing that, avoiding it and pushing the comments back towards 2019 as probably the next hike in Europe. Then we should reassess really from the roller coaster ride that we're going to most probably see now for the next 2 days. The range on the day comes in at 23.50 as support, with the top side coming in now at 124.15 to 124.70. The dollar yen story has pretty much broken that support of 109.65 and now looks towards 108.80. With the technicals extremely low, can still push towards this level, but may see a rebound off there. Failing to do so would open the way further to the downside to 108.20 to 25 and reassess from there. Any advances on the day looks to resistance that comes in around 109.80.85 to 110.80.85, but the market is still very much weakened from the comments that to the US dollar, even though we are oversold. Looking at the pound, you can see that the market broke over 140 and now looks towards the Brexit levels around 145.50. What is interesting is we are extremely overbought from the weeklies as well as the dailies. Nevertheless, the market is still prepared to challenge the top side with 142.60.80 coming in as resistance. Now, failing to hold there would open the way to 144. Support on the day comes in at 141.85. Now, what is interesting is that we are still in dry January in terms of the Brexit, with no comments seen so far. And also, there is some speculation from the market that we might see a softer landing. Therefore, this has put a bit of momentum. And also, what's also priced in now is a Bank of England rate cut for February with this rally. So if they do go, it's more to the fact what Mark Carney is thinking of. And if this is one of the last, or one at least holding off from a rate hike in the near future, then we could see the pound sell off a little bit. But nevertheless, we are slightly priced in here. The gold broke above 1,345 and now on towards 1,375, with immediate resistance coming in now at 1,362. It is viewed that the market could actually push on towards levels of 66 to 71 to 75, with support now seen at 53 and then 47. And to round off with silver and oil, well, the market's now challenging this level, $66 a barrel, and questions: can the rally continue? We are extremely overbought, but nevertheless, the market is still pushing. With a weaker US dollar, the oil is gaining momentum on the back of that. So, see where we close tomorrow morning. If we do close a little bit softer and under 66, then that could give a bit of relief for the market. And to round off with silver, the market is rallied on very hard and now looking towards $17.70 with 35 as support. So that wraps up for today. Thank you very much for joining me, and I hope you enjoy the rest of the day.